Hi there. Yes, this is a fair point. Election do bring uncertainty in Nairobi Stock Exchange. Not only even in Nairobi Stock Exchange, even in the whole country, including yourself. Sometimes you feel you are not okay. So during the election period, shares prices move up and down. They can move up and down quickly because investors are reacting to news, rumors, any political headline, whether it's positive, negative, and this can make the market feel risky in the short term. However, it's always good to distinguish between short-term market noises, that's what I call them, because they are short-term. We have been having election after every 5 years. They come and go. So it's always good to distinguish between these short-term market noises from long-term investing fundamentals. As I keep on saying, myself, I'm a long-term investor, and it's always good to distinguish between both. Historically, Nairobi Stock Exchange has shown that prices fluctuate around election year. As I've seen, it's not the first time. But fundamentally strong companies with solid earnings, dividends, strong balance sheet tend to recover after the uncertainty clears. So why would it be different this time round? And if you remember last year, that was beginning of April, when Trump, the president of US, introduced the tariffs on imported goods, and then there was that trade war, and then China also retaliated with tariffs. It affected the stock market, including Kenya. I remember the prices dipped when there was that uncertainty. The prices dipped on that day, and it was a very good time to buy if you had the money. So, but after that cleared, the stock recovered. Some good stock like the SP 500, they recovered within 2 days. People who had bought it at a dip, they were able to make double the amount after 2 days. So rather than avoiding the market entirely because of the election, or during the 1 year to election and during the election time, a smarter approach for a smart investor would be invest in strong, fundamentally strong companies, or what I call quality companies. And in my ebook above, as I have said, once you enter the Nairobi Stock Exchange, before you buy the stock, there are 6 things, in fact, you're supposed to ask yourself so as to come up with these strong, fundamentally strong companies. They are all outlined in that book. If the checklist, you ask yourself, this company is this and this, you say yes. And if you ticked yes in all those 6 things that you ask yourself, you are on the right path. So start investing in strong quality companies which have fundamentally run, they have paid dividends consistently over the years, potential for growth, all that. The other thing that you need to do as a smart investor, avoid borrowing around that time. You can't borrow to do what? To buy shares. And by there, even now, I'm going to tell you, if you are buying that Kenya Pipeline IPO, please don't borrow money. I've remembered in the past, during Safaricom IPO, Kenyan IPO, people borrowed money to buy the IPO. Then later, because of oversubscription, unarudishiwa pesa. That time you have borrowed, you are paying interest. That is not what a smart investor does. No, use the money from your savings, but don't borrow, because the moment you borrow, there is that element of paying the interest. Yeah, so avoid borrowing during this time of the election to buy shares. Use your savings to buy, or come up with a budget, as I keep on saying, come up with a budget to buy shares, but don't borrow. Then avoid chasing quick profits. Yes, concentrate on those stable companies. You see, the other thing that people forget, that time when the prices have dipped because of this uncertainty, it's a good opportunity for you to buy shares at a discount. Imagine unapewa shares at a discount, the best discount that it can ever be. Buy shares. In fact, like myself, what I'll do around that time, I'll have accumulated money in my SDC. it's called a central depository account. I'll have put some money there. When I see an opportunity, I'll buy. So buy more at that time. Buy the dip so that to average down your price. Then always invest as a long term. Have a long term mindset, but not based on politics. Oh, I'm not going to buy shares because this 1 year to election, then next year we'll have election. No, you are not a smart investor. Have a long term approach, but not based on politics. Politics will come and go. Many things will come and go. Uncertainties there. This world is full of uncertainties. You can remember even during Corona, the share prices dipped. And smart investors that time, they accumulated shares from good companies at a discount. So even this time, use it as an opportunity for you to buy more shares. In simple terms, what I'm saying, election affect people how feel about the market. For some foreign investors, they flee because they don't know who will take over the government. But this does not change the real value, and I underline the real value of good companies. The good company will still remain a good company. And it also creates opportunities to buy those good companies at a discount. So take advantage of that period. Thank you. I'm also reminding you about my ebook there. It will help you a lot to become a smart investor that I have discussed here. What you need to know as a smart investor. Thank you.